One of the most asked questions which people ask me is, what is the most successful or best trading method? My answer to that is that there is no answer, because trading styles really best suits you as an individual. Let's talk about that. Hello there, this is James. You're watching the brand new education series I'm trying to put together called Trading Bites. The reason why it's called Trading Bites is because it's like little bite-sized pieces of education leading up obviously to bigger courses. Little videos to try and whet your appetite. Today's topic obviously is about different trading styles, but before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, to start off with, we're talking about trading styles. But why don't we go through just a handful of these different trading methods which are regularly used. Position trading. This is where you hold a position for a long period of time, maybe for months, even for years. You have a firm belief in the direction of an asset. You have patience. You use heavily fundamental analysis to find the intrinsic value of an asset. You stay the course. You stay the direction of what you believe. You pay no attention to short-term movements. You listen to no market noise. You stay in what you believe in. You stay the course. Day trading. This is when you open a trade only for a single day. That is, hence the name. And you use technical and fundamental analysis, and you open very few trades. You look at the daily trend, plus potential range trading opportunities. You look at the economic calendar, maybe just in case you can trade the news. This takes a lot of time, patience, and research. Swing trading. Now this is a medium-term trading strategy where you only have trades open for several days or weeks, and you look at swings in the market in the medium term, maybe lower or higher. You only open a few trades at a time, and it requires a lot of patience and research in both technical and fundamental. Scalping, or high frequency trading. This is when you jump and exit the market almost instantly. You heavily use technical analysis and you open multiple trades. It's fast. You look at the most liquid pairs, such as the euro dollar or the British pound US dollar. And of course, I'm going to say this, gold. Now this means you're in front of the computer almost continuously. It takes discipline. So which one is right for you? You need to discover yourself to find that answer. So there we have it. Many different trading styles, all with their different attributes and attitudes and methods. But which one is best suited for you? Well, let's start off with position trading. Position trading requires an awful lot of patience. Someone who's not in need for great excitement. Someone who can take the time to do a lot of research, because there's research involved, into discovering the intrinsic value of an asset. Is that you? Is that the sort of person that you are? As well as that, a position trader won't listen to anything else. Won't listen to market noise, so to speak, news on Bloomberg, other people's opinions or something. Is not fast or pays any attention to any short-term movement. Someone who is, for lack of a better word, stubborn in their belief in where that asset may go. As well as that, a position trader doesn't need to be in front of the computer every single moment. They believe in the long game, not the short game. So if you have a full-time job and you're like an investor who believes in a certain opportunity and can look at it that way and do your research, place your trade, and then step away from it for quite a while, then that is definitely the type of trading style for you. Let's move on to swing trading. Again, swing trading is similar because, again, you hold your trades for a long period of time, but not as long as, say, a position trader. A swing trader does require a lot of research as well, a little bit more in front of a computer, because you will have to look at a lot more technical analysis, potential swings in the market. Are you noticing a trend change, for example, on the long term or medium term? And are you able to then hold it several days? Again, it's a bit more exciting than a position trader, but it's a lot more technical. Whereas position trading is a lot more fundamental, digging in deep, getting into discovering intrinsic value. Swing trading is that, but at the same time, is a little bit more technical. Are you noticing a change in direction of an asset in the medium term? And it's less exciting. Plus, again, like position trading, you open very few trades. This again does require a bit of work, like all investment does, but not as much as the other methods we're going to talk about in a moment. A bit more than position trading. You open more trades than you do as a position trader, but it's not so heavy-handed as the other methods we're going to talk about in a moment. So is that, again, the sort of person you are? You want a little bit more excitement? You are a little bit more technical? You want to do a few more trading opportunities, maybe look at range trading a bit more? Is that you? Does that fit your personality? You know, you're patient, but you still want to be a little bit more active in the market? That's swing trading. Moving on to day trading. Now, day traders, again, has a lot of discipline. Very technical analysis based, very fundamental based. Don't forget, with day trading, you open a trade in that day and you close it within hours or, within minutes of that day. But that trade, no matter what, has to be closed by the end of the day. Now, this does require a lot of discipline. A lot of research. You have to be aware of the financial calendar, what key economic events are happening, what's coming up that day. Is it going to be the FOMC minutes? Is it going to be Bank of England interest rate decision? Is it going to be ECB, Fed, US CPI? You have to do a lot of that to know what's happening that day, to maybe even trade it, etc. Then you have to look at a lot of technical analysis on the shorter term. So you have to look at maybe a daily, 4-hourly chart, that sort of thing. So there's a lot of time you have to put in to day trading. Day trading is practically almost a full-time, if not part-time job. Again, you have to have a bit of a need for excitement for this method of trading. Is that you? Is that who you are? And then we'll move on finally to the final method we spoke about today, which of course is scalping. Scalping is high frequency trading. That means you open small trades, but you open a lot of them. It means literally you're in and out the market, catching these minutes or these moments very, very quickly. This requires no attention to looking for the intrinsic value of an asset, no attention to what's happening on the economic calendar. It's all about the movement of the market. And you look at 1 minute, 5 minute chart, and this requires you to be in front of your charts almost continuously. The thing with scalping, where it's like position trading, you tend to open a small position, you hold it for a long period of time, swing, again, small position, maybe slightly bigger, for a longer period of time, day trading, bigger position for a shorter period of time, scalping, smaller position, but really quickly, but you need to open lots of trades. You literally need to almost have your finger on the trading button, almost continuously like that. It's really intense. Are you excitable? Do you like excitement? Do you like action-packed movies, that sort of thing? This is high adrenaline type stuff with scalping. Now, of course, you can buy EAs and black box solutions to do this for you. Again, I'll probably do a video on those because, again, it's a topic all in itself. But you have to ask yourself, are you really in it for the excitement? Do you have the time to do that as well? Plus, it's really technical analysis based. So you have to know all the technical analysis schemes for short-term trading. It's so fast and it's high frequency trading. You can be successful, like all methods can, but does it fit your characteristic? Again, only you can decide that. I'm not the person here to tell you which method is best because I do not know you. Only you know yourself, and you know how much time you can put aside to dedicate either the 4 methods we discussed today. Now, of course, this is just trading bites. It's a bite-sized piece. There's a lot more to go into this, and we will do webinars and other videos which will go a lot more deeper into this topic. A lot more deeper. This is, like I say, it's trading bites, bite-sized piece, just to, sort of whet your appetite, so to speak, so we can look at bigger courses down the line. But anyway, let me know what you think, what trading course you like to do. But there we go, a brief introduction into a couple of different trading techniques or trading styles. But again, like I always say, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, you do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.